Do you understand how to read candlestick charts properly? If not, then you have stumbled across the best video you could be watching right now. Having the ability to correctly read candlesticks could be the reason why you are not profiting as much in the market as you want to be. In this video, we're going to be breaking down the anatomy of a candlestick, and by the end of the video, you'll possess the ability to predict the trend of any market and identify the best possible points of entry and exit no matter what you are trading. If you find value in content like this, then make sure to like this video and subscribe for more videos like this. Now, let's get to the lesson. So let's dive right in and let's break down and understand the anatomy of a candlestick itself, and then from that, we can put candlesticks together into a chart and then use that chart in order to predict market direction and identify levels of support and resistance where we can then take entries and take profits. So when it comes down to a candlestick, there are four main points. There is the opening price, there is the closing price, and that is basically the bottom of the candle body and the top of the candle body when it is a green candle. And also we have these wicks on the top and bottom that represent the highest price of that candle and then the lowest price during that period. And we'll talk about time frames and periods later on, but let's just say for this example that this is a daily candlestick. So this one candle represents an entire day's worth of price action. We can say from this candlestick that the day had started off at this price, 60 cents. Then throughout the day, the stock had pushed down to a low near 50 cents. It rallied up, hit a high near $1.50, but then eventually by market close, it had closed at $1.40 per share. That is what this candle tells us. And this would be considered a bullish candle or just a green candle because the close is higher than the open. So the market had moved upwards during that period. Now, a red candlestick or a bearish candlestick is very similar. It has the same exact points. The only difference is that throughout the period of the candle, the market had moved overall downwards. And you can see here, the opening price was at $1.40. Throughout the day, it hit a high of $1.50. It pushed down and just sold off all the way down to 50 cents. And then by the end of the day, it closed at 60 cents per share. So overall, the market moved downwards. So that's why this is a bearish candle or just a red candle. Now, some things I want to point out is that not all candles will have wicks, but every candle will have some sort of body. So for example, you could see a situation where, let's say that, the market was just super weak. The market opened up and it just sold straight off, never spiked up at all. And then by the end of the day, it closed at its low of day. So there would just be a full body red candle with no wicks whatsoever. And you could see the same thing with a bullish chart where it was a very strong day in the market and the stock had just rallied right at the open, never dipped any lower, and it closed at its very high of day. You can also see situations where there could be massive wicks. Now, these wicks are kind of important to understand because when you think about it, it means that there was a point where people had stepped in and pushed the market in the opposite direction. And this could indicate either lots of strength or lots of weakness depending on where it is on the overall chart, which we'll explain later. But for example, let's just say that you had a candlestick like this. Now, yes, it is a green candle, but you can see that even though throughout the day it pushed up to a very high price, it sold all the way off back down, which looks pretty weak. And you could have the same thing like this where it seemed like the market had turned red, sold off heavily, but then it rebounded back up and was actually able to close fairly strong. This could mean that there was some type of reversal down here, which you can't really understand reversals just from one single candlestick, but once you put it together with the overall chart and support and resistance, this could be a very good area where you could see the market reverse. So once again, this is the basic anatomy of a candlestick chart. There's 4 main points, and the body will represent where the opening and closing price were, and then the wicks will just show you the highest price of that period and lowest price of that period. Now that we're on the topic of period, like I said earlier, this candlestick could represent any time frame. It could be a 1-minute chart, so every 60 seconds you have a new candle developed. It could be a 5-minute chart. It could be an hourly chart where one new candle is made every hour. It could be a daily chart, weekly chart, whatever time frame you can think of, there is a chart for it. The most common ones that you will see used by traders is the 1-minute chart, the 5-minute chart, the hourly chart, and then lastly the daily and weekly chart. So now let's go into an actual chart and start to use these candlesticks to predict direction and ultimately find areas to buy and sell properly. All right, so here we are on eTrade Pro, and we're going to be looking at some intraday charts of small cap stocks. So intraday just means that it's not a daily chart. You're actually looking at price action within a single day. And here you can see from the top left corner, we are on the 5-minute chart. This means that every candle that you see here represents 5 minutes of price action. So this is an entire day. You can see market open is right here at 9:30 a.m. Market close is right here at 4 p.m. These kind of shaded areas that you see here is pre-market, and then this here is after hours. So now what you need to learn is exactly what support and resistance is. And just to make it very simple for this lesson, support is where you will see price action find a bottom and bounce off of. And then resistance is where you'll see price action top and pull back from. So let's just go in right down into pre-market on this day, and let's kind of break down what happened. All we really know from this price action is that there was some type of event that brought in volume and it ran up. You can see very strong bullish green candles overall, and then overall it hit a top and found resistance near $10.60. One pro tip is that whenever you're identifying levels of resistance or support, don't focus too much on the exact high of the wick, but focus more on where the body's topped out. And you can see these kind of 3 candles here topped out near 10.59. So that is a level of resistance because we can see the price action had pulled back from it. Eventually, you can see from this that the price action was able to find support near 8.69. Now, we don't know yet if this was prior history from the chart, so we wouldn't really know this is support, but we're just identifying it now. Overall, the price action was able to reverse back upwards. It had a big spike up. It tested that resistance again. Once again, the candle bodies had rejected. So now we're very confident in the idea that this is resistance. So now the way that you could trade a chart like this is you look for 2 scenarios. Either look for it to break down through support and then use the idea of previous levels of support as new resistance and take a short position against that support. So you would look for something like this, where the price action would break down through support, and then you would look for it to bounce up and then use previous support as resistance, take your short position there and ride it downwards. That would be one entry to take. Or if you don't want to go short or it just doesn't happen, you could look for the next scenario where you wait for the price action to break out through resistance. And then you use the concept of previous resistance acting as new support. So here you can see we had a very strong breakout. A full body candle had closed above the resistance level. That means that the stock had broke out through that level. And now that we know it's a breakout, you're going to be looking for it to pull back and take an entry on that previous resistance as new support. You can see that ended up being a very strong entry. Nice level of support there. And the stock had pushed higher and found new highs. Eventually found resistance near $13. So this is just a very basic breakdown of intraday price action. What you want to learn to do, especially with small cap stocks or any stock or anything at all, you want to bring in historical price action to find levels of support and resistance. So here we are now on the daily chart. So this means that one candle represents 1 year. And basically you would want to look at this chart and find levels of previous resistance that could act as resistance again. So for example, we see that there is a top here on this candle near 1050. That could be potential resistance. Looking back more, we can see that there was resistance here. This candle with massive volume, the top of the candle topped out at $13. Now, just from those 2 points, and let me just change these to red to signify they are from the daily chart. Once again, we got these 2 points from historical price action. We haven't even looked at what happened today. And if you go back to the intraday price action, you can now seriously leverage that historical price action into your trading plan. You know from the chart that there is resistance, or there is a level at 1050. There is a daily chart level of resistance. And you also know there is a daily chart resistance at $13. So once the stock breaks out through 1050, you could make a trading plan and buy the dip at 1050 and then have a plan that, hey, if the previous level of resistance was 1050 and the next level of resistance is at $13, I'm going to buy 1050 and I'm going to sell at the next resistance at $13. And what do you know? That's exactly where the stock had topped out. Once again, this was all from the historical price action. No crazy indicators needed, just simply utilizing the chart itself. And if you recall back when we were talking about wicks, notice how we saw the stock was able to push above the resistance, but overall we had these long top wicks. This indicates selling pressure. Whenever you see long top wicks on top of levels of resistance, you can be fairly convinced that we are likely to see that resistance hold up and the stock will move back lower. You can see here with this breakout, there was no top wick. It pushed straight through and closed above, so that's when the breakout was on. And likewise, when you see bottom wicks on support, that indicates there is a very good chance that there is lots of buying coming into the stock and it is likely to bounce off that resistance as support. Then when it pushed upwards into $13, long top wicks at $13 indicates it's likely to pull back down lower. And overall, it did reject that level and then faded off. So here's an example of an intraday 5-minute chart where you could actually short and make money when the stock moves down. So typically when you're looking at an intraday chart, there's a few levels you really want to mark off. There is going to be the extended hours high, which here in this case is 263. And also you want to mark the extended hours low. Here, the pre-market low is near 240. These two areas will act as support or resistance once the market opens. Now you can see here in this case, when the market opened, it wasn't able to hold that support it tried bouncing, but then it broke down. So now that it has broken down, we should expect that this previous level of support will hold as new resistance, and you can make a plan to take a short position into that level of resistance and then take profits as the price action moves down. This level is something special for insider members, but overall you can see even when it did bounce back up, it rejected that level once again and then pushed even lower. Now recall this level at 263. This level is actually a daily chart level. You can see back here, if we look at this chart, after this stock had found its top near 283, it pushed downwards, made a smaller bounce, found new resistance at 264 and moved all the way downwards. So now that this was a level of resistance, we can expect that to come into play. And like I said, if you just draw that as a red level, that was actually the pre-market high where the stock had found resistance in that extended hours session. All right, so here is another example of an intraday 5-minute candlestick chart. Once again, that means that every candle that you see here represents 5 minutes of price action. So I have the pre-market high marked off near $13.61. And let's just see what this market did and try to see if we can identify the trend and predict levels to enter the trade for profit. So as I said before, you don't really know the trend until the stock is able to break out or break down through its pre-market levels. So in this case, we have the pre-market high, market opens up. We don't really know if it's going to move upwards. So we just sit back and wait. We wait for the stock to either break down lower or break out through the pre-market high. Eventually, as the market had progressed, you can see that we had a very strong breakout. It was able to push very high through that 1365. So now, once again, I'm going to ask you, where could we see support now? There is a very common theme in technical analysis where we say that previous resistance will become new support. So if you know that the previous resistance is at $13.65, you can assume that to be new support, and that is where you would want to buy into the market. So you would leave a limit sell or limit buy there and wait to see if the stock will pull back. Now, the thing is, everything with technical analysis is not 100% correct all the time. That's why you need to have rules alongside this analysis and have structure around your trades. But you can see in this case, the stock did end up finding resistance at $17.83, pulled back down. Now, would you want to buy this previous resistance at $16.50? No, because the actual previous resistance was after it had broken out through the pre-market level. This did not start squeezing until it broke out through the pre-market high. So this is the previous resistance as new support. So you don't want to be buying at $16.50. You don't want to be buying at $15. No, you wait for it to fall down into, once again, that previous resistance as new support. And you can see it bounced off that perfectly, found really good support there. And now we know that this stock is in an uptrend. So now the new support is at 1360s and the new resistance is at 1783. So if you're buying at 1360s, the first thing you want to do is lock in profits at 1783. You can see the market had pushed up right up into it. You would have taken some profits there. And if it can continue upwards, then you should expect 1783 to now become previous resistance as new support. So let's see what it did. You can see it starts to stabilize there a little bit, and then it pushed up higher and it squeezed even further into a new level of resistance, which we have here as $24.70. So at this time, where should we expect the market to pull back to for a new entry? You'd expect it to pull back down to 1780s or even the top of this candle here at 1865, somewhere in this previous area. That's the only place you would want to find an entry. Now, once again, it's not always going to pull back down there, but that's the best place to take a risk for the entry. Let's see what it did. Now, this one was kind of tricky, and this is where a bit more advanced analysis comes in, but you can see overall, the market did end up stabilizing and finding support in between that range we discussed earlier. This was what we call a selling trap, which I'm not going to get into now, but it's something that you can definitely research further on your own. But once again, you can see that it had found support in that area. When you see that reclaim and hold happen, you would want to buy there, anticipating that if you're going to be buying in the 18s, the next resistance is at 2470. That's a very nice profit there. And let's see if it had played out. Price action moved forward. And then it did. Tested that resistance. You had made an awesome trade there. And on this breakout, we should expect previous resistance to hold as new support. Let's see what the price action did. And you can see it had ended up failing. So once again, this stuff doesn't always work out. But now that it stopped holding previous resistance as new support, we know that the trend is no longer upwards. So we don't want to be taking any more trades. If you did end up taking a trade based off of 2470, this would be a losing trade. And this is what we kind of get into more in the free training down below. But once the stock moves so much, you don't want to keep buying levels. Ideally, you want to only buy the first and second opportunities. Everything after that is very risky. So that's a basic breakdown of support, resistance, and candlestick charts. Something to note, as you progress in your trading, you will find out that the larger time frames will matter more. As you can see with none of these examples, I didn't even touch a 1-minute chart. I never use 1-minute charts, ever. I typically find my key levels of support and resistance from the daily chart and weekly chart. And then I use those levels that I find to trade off the intraday 5-minute or 30-minute or even hourly charts, depending on the price action that the stock is showing. All right, now I am considering making more videos breaking down the intricacies of price action within candlestick charts and how it all ties back to trader psychology. Knowing this stuff is what will really allow you to identify potential short squeezes or avoid getting caught in dumps. So if you're interested in that, then make sure to leave a like and let me know down below so I know that there's interest in it. There is a completely free trading course explaining the basics of small cap day trading in the description below this video. If you're interested in that, then go check it out ASAP. Also, myself and TradeBuddy members are active every single day in our community. So if you want to be surrounded with traders who want to see you succeed, then sign up for our 14-day trial. I really hope this video has helped you out with candlestick charts. If you have any questions, leave them in the comment section below, and I'll talk to you in the next video.